And here we are on the Pound Aussie 5 range, and this is a head and shoulders pattern that I've just got in. It's an aggressive entry on the right shoulder, and this is a little bit more aggressive than usual because I didn't wait for a higher close, and I'm just going to explain why. And first of all, let's delete everything off and just look at our higher time frame analysis and just get an idea of what the market is actually doing. So here we are on the dailies, and what happened was the market came up to the 18300 level, which was right in the middle of the structure zone. It then put in a lovely 3-bar reversal, and then yesterday stalled. It came up, and because for me we haven't tested the highs here, so I think that we can go higher. But let's drop down the time frames. There's not too much here on the dailies other than the fact that we did put in a nice 3-bar reversal, but we came back up and stalled. And then what's happened here on the 240 is we had a nice move higher. We consolidated sideways for a little bit, and then we saw a drop off, and then we had a very bullish higher close candle, indecision, another higher close, and then right now we're trading a little lower. Quite importantly, I'm going to delete this information off. I'm going to put in a structure level right where we're trading at the moment. Okay, the 18200, and if we look for structure, we'll have to look left as well. You can see that we have that 18200 level respected in the past, and with it being a psychological number, it's likely we're going to see some sort of a reaction. Now this is the Pound Aussie, it has a big ATR, so even a small reaction here can be a lot in terms of pips for your stop and your reward. But if we look at it here on the 60, then you can actually see we've had an area that's been tested and respected in the past as well. And so I am expecting a reaction at this zone. Now there is a little bit more we can look at as well, and that is tweezer bottoms, and we have also come into a 382. We actually almost hit a 50%, but we came into that 382 and have held that level right at the 18200. So we have a lot happening here. Tweezer bottoms, structure the 18200 flat. We have put tweezer bottoms in, just an indication that there's rejection at this zone. If you look at the candle bodies, they've closed in the upper 50%, and the 382, and that means that if we do see a reaction at this zone and that head and shoulders that we're putting in, we could potentially see the market come back up to retest the highs here. And so if we go back to our 5 range chart, which obviously gives us a different look on the market, you can now understand why I've taken more of an aggressive entry into this market rather than waiting for a higher close. And there's one other thing as well, and that is we need to draw out what the market has done. So we came down for the left shoulder, then we came down for the head. We did actually make a new low here. Now you have to bear in mind that this is the 5 range, so on the 5-minute or 15-minute chart these are probably just wicks, but here that made a new low. As this was a new low, this became the outside return. We failed to put in a new low. Then what we did is we put in a violation, so we violated this and the outside return, so we violated both of these. So as the market came back down, because I've already had the violation, I could be more aggressive with the entry. And so rather than me wait for the higher close, which was actually this candle here, I was able to get involved at a slightly better price. So if I bring the orders back on, that one, there we go. Okay, so you can now see I didn't really get much of a better price, maybe a pip or so, but we came down. We have not put in we didn't violate this level, and now we appear to be going higher. So I would like to see now this to make a new high, maybe a pull back into the structure level, and then a continuation on up to our targets. And what I'm just going to do here, we know that the structure line here is our structure level. We do have a psychological number there, 182.50s. I'm just going to be why is that not moving? I'm just going to be a pip below that. That's all, because we do have the candle closes there on the hourly, and I do think that we can get up to there. So what does that mean in terms of risk then? Well, it means in terms of risk for this particular trade, this is going to be the risk. And again, if you can get an aggressive entry into the right shoulder on the head and shoulders, and you have confluence on the higher time frames, or at least reasons why the market could go higher, then you can get very, very nice risk to rewards on these particular trades. I had one just yesterday. Those of you that follow me on my YouTube channel, I had a Aussie dollar CAD. It was a 5 range head and shoulders. I used it for a counter trend move. The only problem there is I got stopped out by 1 pip, and the trade went on to hit. So I got stopped out for 12 pips, and the trade then just instantly went on to win for 53 pips. And what I did was very, very similar situation to this. I had my stop just an ATR below the low, but I have a rule, and that is that when the stop is below 20 pips, I don't use an ATR, I use an ATR plus 2 pips, and that just gives me that little bit of extra breathing room. And yeah, so that trade went on to win. So you can see that we're getting a rally here. What I'm going to do now is I'll pause the video before it gets too long, and we'll come back and I'll hopefully record this trade making a new high, hopefully going on to hit targets as well. In terms of risk on this trade, 13 pips. In terms of reward, we're looking at 50, so we're looking at almost a 4-to-1 risk to reward there. So we'll come back to this trade and get an update. And we're back for the last section of the video, and you can now see that we had rallied up and hit targets for 50 pips. Unfortunately, I had to go out this afternoon, so I couldn't in this instance catch the last bit, which is the targets hitting, which is, as you guys know, I love to do, purely because I like the satisfaction of rewatching it over and over again hitting. But nevertheless, there you go, the trade hit, and we can actually see that we came up and tested this level excuse me, multiple times, and but we never actually broke it. So that was an excellent place to take targets for that trade.